So guys, how much capital is required to become a full-time trader? Right? This is a very common question asked by a lot of people who aspire to become full-time traders. Right? So I thought, why not we make a dedicated video where I can talk about the logic, right? Logic behind the calculation for this capital, and where I can share some real life experience so that you can approach this topic from a practical perspective. So let's start with the concept first, right? And it's very simple. All you need is two variables to calculate the capital required, right? And the variable number one is the returns per month, right? What is the return per month that you can generate from trading? Now, this is not the return per month that you are expecting. This is the return per month that you have already generated in the past. So understand this point extremely carefully, because this is very important. You should only be embarking on the journey to become a full-time trader if and only if you have a proven track record of success, right? So let's say, for example, you do have the track record. So all you have to do is just look at your P&L statement, right? Profit and loss statement from the past, let's say 2 years, 3 years or whatever, and calculate the average return per month, the average. Now, very important to understand it's average, because in trading there is nothing called guaranteed returns. There will be few months where you will be very profitable, lot of money, market was charitable, but then there will be months when the market becomes extremely volatile, or probably you have bad luck, whatever happens, you probably ended up in a loss. So it's okay, it's perfectly fine. What really matters is that in the long run, you were profitable. So you just have to calculate the average returns per month. So let's say your average returns were 5% per month. Now the second variable is equally important, and that is, what is your expectation? How much money do you want to generate from trading per month? Is it 50,000 rupees? Is it 1 lakh rupees, 2 lakh rupees, whatever is the case? And again, this is one area where everybody has a different requirement, right? Depends on your family, depends on whether you have kids, how many kids do you have, where do you live. People say living in cities, they probably will have a higher requirement versus somebody, let's say, living in a small town. So depending on your personal circumstances, how much money are you expecting to generate per month? So let's say, for the sake of simplicity, you want to generate 1 lakh rupees per month, right? So now you have both the variables. Variable number one, average return per month. Variable number two, your expectation per month. When you combine these two variables using this formula right here, you can very easily calculate the capital required. So the calculation is very simple, guys. We just have to basically divide the two variables. But now, let me tell you some real life aspects of this topic so that you can have a practical understanding of how to approach this topic, okay? So the first thing that you need to keep in mind is that when you are considering the average returns per month, you have to be very conservative, not liberal, conservative. Now, what does that mean? It means that you have to be brutally honest with yourself. What was your average return per month in the past 1 year, 2 years, 3 years? You cannot just pick and choose the months where you were profitable and very conveniently ignore the months where you were not profitable. Now, why am I saying that? Well, I know how traders think because I myself am a trader. So we have a tendency of selective perception, right? So we like to give ourselves credit for the months where we were profitable, and those trades where we were not profitable, we say that, array, that was one day, psychologically I was not balanced, I just kept over trading and I incurred a loss. So let's not include that in the calculation, right? And that's not a good idea, right? Good and bad, they all have to be in the average, right? They have to be in the average. You cannot be selectively picking your winners and losers and just focus on the winners and ignore the losers, right? Now, the other aspect of the average return is that it's very hard to generate a high return on a consistent basis. Okay. Now, what is a high return? So in my books, any return which is higher than 10% per month would classify as a high return. Okay. Now, there are people out there who come to me and they are very excited. A lot of people are young people. They come to me and say, oh, I got I made 20% returns, 30%. Sometimes even people will say I made 100% returns. Okay, and that is the number that they want to use in their calculation. But there is a problem. What is the problem? The problem is that if you dig a little bit deeper, you will find out there are certain aspects that they have not considered. Right? First of all, people who claim that they made a lot of returns, they did it over a very short period of time. 2 months, 3 months, they were lucky, or they probably are really good traders, but they have not proven to themselves over a long period of time. Right? That's one loophole. The second loophole, sometimes where people get a little carried away, is that when people trade with a very low capital, right? So let's say you started with 1,000 rupees of capital. If you converted that 1,000 rupees from day 1 to, let's say, 3,000 rupees at the end of month 2 or month 3, percentage wise the number looks very big, but that percentage cannot be used for your full-time trading career, right? I mean, you cannot really use 200% returns as your benchmark for calculating the capital. Why? Well, the thing is, percentage wise it's very impressive, but in reality, can you live on 1,000 rupees, right? I mean, per month, right? You cannot, right? So let's just be practical about this. 10% return, in my opinion, is extremely high. If you can make it, if you have done it, that's very good. And it also depends on the strategy, right? So let's say, for example, in my case, I like to sell options, and in selling options, you don't get a very high returns per month. You get a higher probability, but not higher returns. So in my case, returns can vary depending on the strategy. It can be from 5% to 8%. But the strategies that are based on price action, they tend to have a higher return, right? So they can be 10%, 11%, 12%, sometimes even 15 or 20%, but that depends on the skill and experience of the trader. So the main point that I'm trying to communicate here is that you have to be brutally honest with yourself, and whatever is your average, you have to go on the safer side, go on a conservative side, and consider, if let's say you made 10% returns per month on an average, consider that for the sake of calculation, let's say 8% or even let's say 5%, because it's better that you underestimate yourself than overestimate yourself. Right? It's a very, very important point. Now, the other aspect of this question is whether or not you want to trade in futures and options. Okay, if you want to trade in futures and options, you need to have a minimum capital of 10 lakh rupees if you want to make a career in trading. Now, some people might not like it, some people will argue with me, and I am open to the criticism. But the real life aspect of this is that when you're trading in futures and options, you cannot just take one trade, right? You cannot just take one trade and then sit back and then see whether the trade worked out or not. In trading, especially in options, what you need is you need a lot of adjustments. Adjustments means if let's say the trade is not working out, you adjust your trade in such a way that your losses can get minimized, or maybe the losing trade can be turned into a profitable trade. So you need a certain capital to defend your position, right? So you need a certain capital allocated for that. So if you are, let's say, operating with a very small capital, let's say 5 lakh rupees or 2 lakh rupees, you can take a trade, no problem. But if the trade starts to go in a loss, then it will become very hard for you to defend your position. So that is the reason why people who have bigger capital, they almost always end up with a very small loss, because they have the capability of defending their position. Right? Even if, let's say, the market starts going against them, they keep defending, and eventually things work out. So 10 lakh rupees, I will say, is a very reasonable minimum. If you have more, let's say 15 lakh rupees, 20 lakh rupees, you will be much more comfortable. Now, another aspect of having a reasonable capital, let's say 15 lakh, 20 lakh rupees, if you can do it, is that, let's say you started your trading journey, and as luck would have it, let's say your journey starts with a loss, right? The first month went in a loss, second month also went in a loss, third month also went in a loss for God knows whatever reason, let's say based on market conditions or trading psychology, whatever happens, you are in a loss. If you have enough capital, then these drawdowns, as they are called, will not bother you that much. right? You will not get shaken out. You will not get afraid. Arey, kya ho raha hai? What is going on here? Did I take a right decision or not? So having a reasonable amount of capital will keep you stable. You will not get nervous. You will not get shaken out, right? And market has a way of testing our resolve, especially in the beginning. So have a minimum capital, have a minimum cushion so that you can handle the drawdown, especially in the beginning. Now, the last point that I want to make about this topic is that between the two variables, the returns and the expectation, the easiest thing to manage is your expectation, right? Returns are not up to you. I mean, up to a certain extent, it's basically a function of your skill and experience. But beyond that, it's up to the market, right? But expectation is something that you can control. So why don't you get your expectation lower, not higher, lower? Now this can become a little counterintuitive because people who want to become full-time traders, they aspire to buy a Ferrari, they aspire to live a lifestyle of riches. Whereas what I am saying is that bring your expectation down, right? So that kind of doesn't add up. But again, as I said, I'm talking from a practical aspect, practical experience, rather than talking from a some dreams or some fantasy out there. So take the same example, right? So you had, let's say, you are making 5% per month on an average, and your expectation was 1 lakh rupees per month. For that, you needed 20 lakh rupees of capital. What if you can bring down that expectation from 1 lakh rupees to, let's say, 50,000 rupees? Now, how will you do it? I don't know, right? Everybody is different, right? So maybe you can cut down your expenses of, let's say, going out or cutting down any discretionary spending that you can do. But if you can bring down your expectations somehow, and a lot of people have done it. A lot of people actually have moved to smaller towns or even their hometowns because the cost of living is cheaper there. And if you can do that for the same returns per month, let's say if your expectation is only 50,000 rupees per month, again, I'm just saying for the beginning. Later on, once you become successful, then you can keep increasing your expenses, whatever you want to do later. In the beginning, 5% average return, 50,000 rupees your expectation. Now the capital required has drastically gone down to 10 lakh rupees, right? So this is my advice, sincere advice, that when you are beginning this journey of trading, keep your expectations low. It will first of all help you by even with a relatively smaller capital. Secondly, it will reduce the mental pressure on your head, right? So every month, if you are thinking of making 1 lakh rupees, the pressure starts to build up from month 2, month 3, month 4 onwards, in case, let's say, you are not seeing immediate success. But if your expectation is low, then you will not get bothered too much. You will stay in the game. And in my experience, trading is all about staying in the game. If you can stay in the game, you will win, right? But that is the hardest part. So that is basically my advice, guys. This is a very serious topic. Becoming a full-time trader is not really a joke. I mean, it requires a lot of serious thinking, a lot of experience before you can make the jump. And in fact, I have made a couple of videos on this topic. You might want to check them out to understand the other aspects of becoming a full-time trader. But I hope that from this video, at least you got a broader framework of arriving at the capital required for full-time trading.